I'm really excited about this one, guys. We have 4 really interesting opportunities that I want you to take a look at. So we're going to get right into it right now. So we're going to start off with the famous Santa Claus rally. Now we're a little bit into that rally right now, but that doesn't matter because the ETFs I'm going to be showing you today have opportunity for not just the next couple of weeks or so, but into the next year. This is some research by sentimenttrader.com. And what they're showing us here is how all the sectors of the S&P 500 have performed over the last 2 weeks of the year from a trading basis. This starts in 1953, and you can see on the chart that small caps, value, and financials and materials have been the top performers. Now compare some of these returns. Small caps at 400+%, value at 340%. Now these are cumulative returns, but this is 2 weeks at a time over the 74 years. Now we take a look at some of the bottom performers, and you'll see it's like half of the performance of these top 4. So I think it's pretty obvious to you guys, I'm not even going to be looking at the bottom performers. We want to go right to the top. And what's interesting is the charts look really, really opportunistic. Let's get started. As you remember on the list we were just looking at from sentimenttrader.com, the first chart was the small caps. Now, a lot of you know the Russell 2000 is the benchmark small cap index in the US. IWM is the iShares ETF that represents that group. And here's the chart. And as you see, we've got Bollinger Bands and we've got Stochastics. Just really quickly, Bollinger Bands measure volatility. When you have a move to the top of the volatility bands, that means things are overbought. When you have a move to the bottom, it can mean things are oversold. Now, stocks can run along their Bollinger Bands, but it's a general indicator. Same with Stochastics. If we look, when we get overbought signals on the Stochastics, meaning it's moved above its top line, and a move to the top of the Bollinger Band, it sometimes indicates that the stock will move down, and vice versa is true as well. As we can see, when Stochastics reaches lower line, Bollinger Band is touched on the lower level, you often get a move to the upside. And this book, which was my bestseller, I wrote it about 10 years ago. In fact, this is the second edition of it. It's called Sideways. If you want to learn about some of the indicators that I like using, including these 2, they're covered in this book, as well as my online course, which is on sale until the end of December. So what are we looking at here? If I erase a few things, just to make this chart a little bit easier to read, we can see that we've recently seen a touch of the top band and a touch of the top of the Stochastics indicator, which in turn pushed the market down. Here we are, though, at the bottom of the Stochastics range and very close to the bottom of the Bollinger Band. But even more interesting is technical support on the IWM shares is right near where these 2 indicators are suggesting things are getting oversold. That's really interesting because on a longer term basis, a bounce off of major support from an oversold level can mean upside, not just in the short term, but over the longer run. Now let's look at the next sector in our 4 attractive sector ETFs, value stocks. Here we have a strong move from the top Bollinger Band right to the bottom. That's quite a fall. And you can see Stochastics is now quite oversold. Interestingly, if we zoom in on Stochastics, and you can see when Stochastics hooks up, like here and here, we often get a strong move up on the market. I think the small caps and the value ETF are looking pretty good right now. From a longer term perspective, take a look at the trend. The value stocks have been in a very strong uptrend for quite some time. Even on the daily chart, we can see that this trend line is being tested right now. To me, there are 2 factors here, an oversold sector and a touch of the trend line. Definitely one to keep your eyes on. The third sector we want to talk about is materials. Now, materials over the past year have been in a very sideways trading environment. I sometimes call this a swing trading environment because that's what you can do with this kind of sector. You can buy near the bottom, sell near the top. And short-term indicators, like we're talking about today, can help us discover when the opportune time to enter for that swing trade. Well, we're not only at the support level on this 1 year or so swing trade, but we're also seeing an oversold stochastics, and we're right at the bottom of the Bollinger Band. Again, probable opportunity when things get oversold increases when we're testing a very proven support level. And I think that's what's happening right now with the material sector. Our final sector ETF to look at is the financial sector. And this again is another spider ETF. The financial sector over the past year has been in an uptrend. Simple line. When we see tests of that uptrend, you can see it generally bounces off. Well, we're approaching that trend line right now. We're also seeing a test of the lower Bollinger Band. We're also seeing an oversold stochastics. Now, compare this to some of the other charts we just looked at. You can see that the stochastics line is not hooking up yet. We want to see that stochastics indicator hook up to prove that the trend line is going to hold. Nevertheless, this is a very attractive looking chart. So we've covered 4 sectors today that I think are reasonable candidates, not only for the last couple of weeks of 2024, but into the new year. Now, I have the opinion that these sectors all look pretty interesting from a longer term perspective, but I want you guys to keep in mind that if the broader market decides to take a breather, and there's good potential that'll happen, I would suggest that anything will move down if the overall markets move down. Having said that, the setup for these sectors, if they do move into the new year, indicates that they're on trend and they're likely to continue with decent performance into the new year. The only one of the 4 that I would consider as a non-longer term hold would be the material sector. It's obviously in a swing trade pattern, and those kind of patterns must be traded, not held. I hope that helped, and I hope that gives you 4 new ideas to take a look at coming into the new year. And we'll be back with another video later where I talk about the big picture stuff. Thanks for watching.